Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. An indecisive spinning top yesterday for a long tail, which goes some way to justifying the previous session's inverted hammer pattern, maybe more in common with a bearish continuation pattern rather than the traditional bullish reversal pattern. Anyway, the tail dropped all the way down through to the important but slowly rising long moving average, and that's currently at 97.30, but crucially was not able to close under it. Now this last bit is a continuation of support we've seen since March this year between 96.90 and 98.50, if on a closing basis this time. Above we have two congestion areas, one between 101.55 and 103.35 dating from August 2014, and a second between 106.75 and 108.65 dating from from July 2014. The second seems the more effective right now. Meanwhile, below we have a lesser Fibonacci line at 92.07, but there are two patterns to look out for. The first is the head and shoulders neckline of the October to November 2021 move, currently at 89.89. And the second is the 50% Fibonacci line in November 2022, March 2022 move at 87.41. To be honest, neither of these looks great, as we could regard the whole of the late December 2020 to date action as a possible big M pattern. This pattern has not been triggered as yet, but it came awfully close to doing so yesterday. So far today, well, a reactionary move back up, but only as far as the congestion from August 2014 between 101.55 and 103.35. Spot gold. An immediate countering bearish engulfing pattern and bearish opening long black Mariposa yesterday. It seems the market has started to finally move down and away from the middle time, currently 17.29, of the April to June bearish shift pitchfork, and once again towards the lower time, currently 17.02, of the March to April bearish shift pitchfork. I say move towards, but I suspect it's more a case of the market being squeezed between these two tines, much like a toothpaste tube, from two different bearish shift pitchforks from two different time periods. This now brings to the fore something I've been talking about since last month. There is an argument for the December 2021 today action being a possible really big head and shoulders pattern. Now we are past forming the second shoulder and look like we are heading lower. If that is the case, then we have a primary target below in the 1676 area, or where the March 2021 low is, and with a harder to achieve secondary target in the 1560 area, well below the bottom of my daily chart. Now you may be wondering, those seem a little small to be targets. Below. Well, you're right, and I can explain that. You see, I use the April high at 1998 in my calculation rather than the more extreme March high at 2070. You see, I would rather err in caution than fail in excess. Support below the market is interesting. It comes from the August 21 low at 1684 and obviously the March 21 low at 1676. Now, so far today, a dip down to the lower time of the March to April bearish shift pitchfork, but holding there and still within yesterday's range. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.